After a strong year in technology, it's perfectly normal to digest and correct those gains. And coming out of these corrections, it's common to see another leg up in the market. And the three historical precedents are 1995, 2003, and 2009. These are all 3 years where the NASDAQ composite was up between 40 to 50%. Following those large gains, the market corrected approximately 4 to 8 months. And then coming out of these corrections, we saw further gains and another leg up. And the analogy to today's market is 2020, the NASDAQ was up a little over 43%. Growth has been in a correction since early February, so we're about 4 or 5 months into this correction. And now coming out of this correction, I feel that we're setting up for another significant leg higher.
Is it going to be powered by something in particular, or just this combination of a lot of cash, a lot of investor interest, fewer stocks? We talk about buybacks. This is probably going to be the biggest year for corporate buybacks in the history of modern humanity. Or is it low rates, or D, all the above, Joe?
Yeah, I think it's all of the above. For sure, the Federal Reserve and all the global central banks are providing an equity-friendly environment. Interest rates are going to stay low, so that's part of it. I also think the technicals are improving, where all the major indices are above their key moving averages, showing institutional support, that the large institutions continue to support this market. And then fundamentally, things continue to improve. There's a lot of growth in earnings and sales, profit margin expansion, and there's so many sectors participating. To me, the sign of a healthy market is when you have broad-based participation. So specifically within tech, you're seeing software coming back, mega cap tech, a lot of the FANGs coming back, semiconductors continuing to benefit from the chip shortage, and medical products as well, with a lot of newer innovative technologies coming up.
Yeah, our morning RBI is going to highlight the 6 stocks that have more than doubled in technology over the last year. I'll save that. It's called the T's in television, Joe. You know what's interesting to me, and maybe it has nothing to do with one or the other, but it felt like, Joe, when crypto was really hot, when everybody was talking about it, Bitcoin 60,000, Ethereum 4,000, tech stocks got weak. Now crypto's been weak and tech stocks have got hot again. Maybe it's just non-correlative, a total fluke. But when you look at the charts, it feels like there's a bit of a bouncing around between the two groups of certain investors. I don't know. Any thought on that at all? Or maybe it's just Friday insanity on my part.
No, that's a good point. I don't know if there's enough data to correlate, crypto to the market. Some people have tried to make those correlations, but for me, I don't know if there's enough data. I think it's more of just the market is driven mainly by two things, earnings and interest rates, and that's more what I'm focused on. And with this low interest rate environment.
Are you happy with both, Joe?
Yes, I am happy with both. The Fed's not raising rates, as they indicated in last week's meeting, until 2023. Even if they taper later this year or early 2022, it's still an equity-friendly environment. So the interest rate picture is strong and the earnings continue to improve. So that's mainly what I'm focused on. And I think that's what's going to drive this next leg higher, specifically in growth.
And that leg higher, you believe, when you say growth, you think it is going to be big cap tech that once again continues to lead us, Joe?
Yeah, and the market tends to move and advance ahead of events. So maybe we still have to get through the end of this quarter, some portfolio rebalancing and so forth. That's normal at the end of quarters. But then now we can shift from a lot of the interest rate and political talk to fundamental talk, looking in advance to the next set of quarterly earnings. So we could see this move start to happen in early to mid-July in anticipation of the next set of quarterly earnings. If anything unforeseen happened and maybe we corrected or went sideways during the summer, then I could see it happening by the fall. But again, in the next few months, the next leg higher in technology looks to be led by a lot of those mega cap names.
Shepard Smith here. Thanks for watching CNBC on YouTube.